This is Tony Novak here to share a few points on how to stay out of tax trouble. Let's jump right in. Today's topic stems from yesterday. We covered nonprofits. We're going to stick with the subject of nonprofits and talk about what happens when nonprofits break the rules. And by break the rules, we mean, since this is a tax discussion, we're talking about break the tax rules. For as a starting point, when we talk about nonprofits, whether it's in your community, on your board of directors, online, especially at social media, we read a lot of things like this is allowed or this isn't allowed, and you have to do this and you can't do that. Well, so what happens if your nonprofit doesn't do it that way, does it differently, does it the opposite of what you understand was allowed or required? Well, the short answer is nothing. Let me explain. So, first of all, half of the nonprofits are under $50,000, and half of nonprofits have under $100,000 in total assets. They are not exactly high target audit requirements. We are in a voluntary compliance environment. That's how our tax system works. And so that if your organization breaks the rules, you're expected to find a way to get back on the mandated legal path. What happens if you don't? Probably nothing. The main reason that, well, first of all, let's say if an IRS doesn't pay taxes, by that I mostly mean employment taxes or workers' compensation insurance. One very big exception there is that each individual director can be individually liable, and we're not going to get sidetracked into that detail, but the point is that there is risk for every single individual director if a required tax is not paid, or there's some other problem of the organization. The IRS has the ability to pierce the corporate veil and go after individual directors in that circumstance. So that's a big exception to what we're talking about. But let's say we're just talking about income tax. What's the biggest reason that charities lose their tax exempt status? It's not for breaking the rules. It's for not filing information returns. We don't even call it a tax return because if they have income, they don't even pay taxes on it. But a nonprofit that doesn't file for 3 years can lose their tax exempt status. That's more or less an automated process. And even in that case, you can still get it back. It's not a big deal. States have other requirements. Similarly, if you don't file each year, you may find that you lose your state registration as a charity. And if the organization does lose its charity status, future donations cannot be deducted by the donor. Not a big deal because most donors are not deducting contributions to charities anyway. The vast majority of individual taxpayers and contributions into nonprofits are not subject to tax deductibility. If you lose your tax exempt status and you're receiving a grant from another nonprofit or a government, that may cause you some problems. We may not qualify for that grant, so that's a significant item. But other than that, breaking the rules, not following, you have to do this, you're required to have that, or you need this document, or you need this policy in your records, or whatever the case is, there's really not much in the outside of voluntary compliance. Thanks for showing up today. If you have feedback or a topic you'd like to see covered in more detail, I'd love to hear from you. Just send a message. I'll be back tomorrow for another Tax Minute.